Hello, everyone. Good afternoon, and a very warm welcome to today's pensions quiz, which is the concluding session of our Pensions Discovery webinar series. My name's Duncan. I will be your quiz master for today's session, and we do have Alice standing by in the background should you need any assistance in the Q&A. Now, before we get underway, I'll run through a little bit of housekeeping just to explain how everything will work for this session. So if you have a microphone, it is muted automatically and you can't take yourself off of mute. So don't worry about any of your background noise coming across on this call. You do still have access to the Q&A panel, which you would usually use to send us your questions. But today you'll be answering the questions rather than asking them in the main, but we will still use the Q&A feature in our anagram rounds. So we've got 4 anagrams during the quiz today, just a bit of fun. And if you solve them, you can submit your answer via the questions panel, and we will shout out the fastest correct answer for each of those rounds. We don't currently have a handout available, but at the end of the session, we will upload the answers to all of today's quiz questions so that you can take that away with you. That little settings icon allows you to adjust your audio settings, and should you wish to go to full screen mode, you can find that from the 3-dot menu icon. Now, the format of today's quiz is that we will have 4 quiz rounds, each with 4 questions. The questions will be presented on screen as a poll. They'll all be multiple choice. So all you would need to do when the question pops up is to choose what you think is the correct answer, or in some cases, answers, and then click on the submit option to send them through. So for each question, we'll give you about a minute to think of an answer and to submit it. And once we've asked the 4 questions in the round, we'll then go through the correct answers, and we will also do those anagrams as well. So hopefully that's all straightforward enough. And we are going to start our quiz with round number 1, which is themed around our pension schemes and salary sacrifice pensions webinars. So I'm going to switch the camera off for the quiz, as we'll be using the polling feature instead. And we're going to kick things off with question 1, which is on screen now. So question 1 for you: where in Sage 50 Payroll do you set up a pension scheme? Is it A, from company, then settings? Is it B, from company, then pension schemes? C is payroll, then import pension updates. And answer D is payroll and send pension data. Great, and we will move on to question 2. Question 2, which of the following are included in qualifying earnings? A, salary. B, commission. C, expenses. And D, overtime. And for this one, you would select all the correct answers. And let's go to question 3. So where can you amend pension contributions for one employee? Is it in company, then settings? Would it be company, pension schemes, then edit? Is it in the employee record, pensions, and then manage schemes? Or can you do this within payroll, enter payments, and then deductions? Right, so last question in the round. Question 4. How does an employee's salary sacrifice pension appear on a payslip? A, as a standard employee pension contribution. B, as a negative payment, reducing gross pay for tax and NI. C, it's included with the employer contribution. Or D, it's not shown on the payslip at all. So again, for this one, select all answers that apply. So that is the end of round one. And before we move on to go through the answers, let's show you our first anagram of the quiz. So anagram round for round one. The anagram is Alice's Scary Fair. And the clue is everyone's a winner. That's Alice's Scary Fair. And the clue is everyone's a winner. So if you solve that anagram, pop your answer into the Q&A and we will shout out the fastest correct answer after we've been through the answers to round one. So question number one was, where in Sage 50 Payroll do you set up a pension scheme? Let's take a look at what you said. So for this one, 86% of you have gone for answer B, that's company, then pension schemes, 14% going for answer A. So let's take a look at whether you were correct on that one. The correct answer was indeed B, company, then pension schemes. Question number two, which of the following were included in qualifying earnings? And remember, you selected all that applied. So three popular answers for this question. We've got salary, commission, and overtime, with nobody going for expenses. So let's check to see if you were right on that one. Correct answers were salary, commission, and overtime. So top tip on this one, qualifying earnings are typically any payment that is subject to tax and national insurance. And expenses in this case, non-taxable payment, doesn't count towards qualifying earnings. Question three, where can you amend pension contributions for one employee? So few answers for this one, but most of you, 89%, have gone for employee record, pensions, and then managed schemes. So let's see if you were right on this one. And you were. Answer C is where you would edit the contributions for an individual employee. If you went to change the contribution within company and pension schemes, that would actually change the contribution for everyone who is assigned to that scheme who is on the default contributions. So if it's just for an individual, it's within their employee record on the pensions tab, and you would manage their scheme from there. And question four, how does an employee's salary sacrifice pension appear on a payslip? And again, more than one right answer for this one. So we've got two popular answers. B as a negative payment, reducing gross pay for tax and NI. And C, it's included with the employer contribution. So let's check on the correct answers for that one. It was indeed B and C. So remember, it is a salary sacrifice arrangement, so there isn't technically an employee contribution. You will see a negative payment line representing the salary sacrifice, and then the combined amount is shown as an employer-only pension contribution. So well done if you got 4 out of 4 on that round. Let's take a look at the anagram. So this was Alice's Scary Fair. Everyone's a winner. And did anyone get this one? The correct answer is salary sacrifice. And I can see loads of you got this, but our fastest correct answer today was from Claire. So well done, Claire, getting salary sacrifice, and well done to everyone else who got the anagram. So moving on now to round number 2. This one's themed around pension calculations. And we'll go straight on to question number 5. So how are pension contributions deducted from an employee's pay? Is it A, before calculation of tax. B, before calculation of tax and national insurance. C, after calculation of tax. Or D, it depends on the pension scheme. Let's now move on to question number 6. So how does use qualifying earnings for pensionable pay affect pension calculations? Is it A, the employee contributions are reduced by 20%? B, pensionable earnings are between lower and upper thresholds? Or C, the contribution is calculated from basic pay only? And we'll move on to question number 7. If the employee's pension contribution is deducted after tax, the contribution is reduced by what percentage? A, 4%, B, 5%, C, 20%, or D, 40%? And let's move on to the last question of this round, question number 8. So where can you check if a payment is set up as pensionable or qualifying earnings? Is it A, company pay elements, B, company and legislation, C, enter payments on the summary tab, or D, reports, company, then run the payment types report? So again, select all correct answers for this one. Great, and that is the end of round 2. So before we go on to the answers, let's have a look at our next anagram round. So the anagram for round 2 is extra life, and the clue is as arranged with HMRC. Extra life as arranged with HMRC. So when you work that one out, pop your answer in the Q&A, and we'll let you know who was fastest with the correct answer. Right, so let's go through the answers for round number 2. Question 5 was how are pension contributions deducted from an employee's pay? So massive majority of you have gone with answer D. It depends on the pension scheme. That's 97% of the answer. And was that the correct one? It certainly was. It depends on the pension scheme, specifically the tax relief arrangement that it uses. So if it deducts before tax, it's known as a net pay arrangement. If it's deducted after tax, it's a relief at source arrangement. Or if there's a reduction in salary, so before tax and national insurance, that would be a salary sacrifice pension scheme. So well done if you got that one. Question 6, how does use qualifying earnings for pensionable pay affect a pension calculation? So a few different answers for this one, but 87% of you are saying that the pensionable earnings will be between lower and upper thresholds. So let's just check on the correct answer to that one. And it was B. Pensionable earnings are between lower and upper thresholds. And if you ever need to check what these thresholds are for each pay frequency, in your payroll, you can always go to company and then legislation, and you will find the lower and upper threshold and the earnings trigger on the auto enrollment tab. So question 7, if an employee's pension contribution is deducted after tax, the contribution is reduced, but by what percentage? So again, a few different answers for this one. 76% of you have gone for answer C, which is 20%. The correct answer for this one was C, 20%. That is the basic rate of tax, and 20% of the pension contribution is claimed back from HMRC directly by the pension provider and put into the employee's pension pot. So if there was a 5% contribution, 20% of 5% is 1%, which means in effect only 4% is taken from the employee, if you follow that. So on to question number 8. Where can you check if a payment is set up as pensionable or qualifying earnings? Multiple correct answers for this one. So let's see what you said. So a bit of a mixed bag. We've got 73% going for company and pay elements, 44% saying reports, company and payment types, and then a few responses for the other two answers. The correct ones for this question were A and D. So you can check your pay element settings in company and pay elements. You can also view those settings on a report. So it's the payment types report found within company, within reports and company. So if your scheme doesn't use qualifying earnings, if a pay element has the pension main and AVC box ticked, it'll be used in pension calculations. If your scheme does use qualifying earnings for pensionable pay, it is the payments that are flagged as qualifying earnings that are used in the calculation, but then restricted to the lower and upper threshold. So well done to anyone that got 4 out of 4 on that round. Let's check on the anagram. So this one was Extra Life as arranged with HMRC. And this was an anagram for tax relief, which I can see plenty of people have got right in the Q&A, but the fastest correct answer again was Claire. So tax relief was the anagram for round number 2. So well done to everyone that got that one. Let's go straight on to round number 3 then. This is themed around the pensions module sessions. So starting with question number 9. So if you have the pensions module, how should you assign a pension scheme to an employee? Is it A, in their employee record on the pensions tab? Is it B, by running a pension assessment? Or is it C, by using a global change? And we'll move on to question 10. So when should you run the pension assessment? Is it A, before enter payments? B, after update records? C, at the end of the tax month? Or D, after enter payments, before pre-update reports? Great, and we'll move on to question 11. So what does a flag in the pension assessment indicate? Is it A, the employee has a change to their worker category or status? Is it B, the employee needs to increase their pension contribution? Or is it C, the employee has opted out and you need to process this. On to the last question of this round, question number 12. Which of these pension providers can you send pension data to using Pensions Data Exchange? A, Nest, B, Aviva, C, the People's Pension, and D, Smart Pension. So again, for this one, select all answers that apply. And that is the end of round number 3. So before we go through the answers, let's look at the next anagram round. So this anagram is being Lionel, and the clue is they need to ask first. Being Lionel, and they need to ask first. So if you can work that one out, pop your answer in the Q&A, and we'll give a shout out to the quickest after the answers to round 3. So first question in this round was, if you have the pensions module, how should you assign a pension scheme to an employee? Let's take a look at what you said for this one. So a little bit of a split. We had 70% going for by running a pension assessment and 30% saying in the employee record on the pensions tab. So let's take a look at the correct answer for this one. And it is answer B, by running a pension assessment. So by doing it this way, it will set the status as auto-enrolled, helps you create pension data, so enrollment files for the send pension data option, and also generates the letters in send pension correspondence. So if the status is showing joined in the employee record, that would mean that the pension scheme was assigned manually. But for anyone newly eligible, they should have the pension assigned using the pension assessment. So well done to the 70%. Question 10 was, when should you run the pension assessment? So 91% of you are saying after enter payments, but before pre-update reports. Let's see if you were right. And the answer is D, after enter payments, before pre-update reports. So the assessment needs to look at the wage and age of the employees. So you need to have entered the correct payments first. And top tip, if you're ever unsure what order to do things in your payroll process, check out the process map in Sage 50 Payroll, and you can follow that from left to right. Question 11 then was, what does a flag in the pension assessment indicate? So most popular answer here is that the employee has a change to their worker category or status. And the correct answer was A. There's been a change to the category or status. And remember, you can filter the list in pension assessment using the filters in the top right. So you can straight away highlight employees that had a change since the last assessment. And last question of this round, which of these providers can you use send pension data to send pension data using Pensions Data Exchange? Easy for me to say. Let's see how you voted. So 3 are standing out here: Nest, the People's Pension, and Smart Pension. 20% also saying Aviva. So let's see what the correct answers are for this one. And it is Nest, the People's Pension, and Smart Pension that are supported by Pensions Data Exchange, or PDX, as we like to call it. So well done if you got 4 out of 4 in that round. Let's look at the anagram again then. So this one was being Lionel. Not so many answers for this one. So the clue was they need to ask first, being Lionel. And the answer to that anagram is non-eligible. So that's one of the worker categories that you'll see in the pension assessment. So out of all of the correct answers, the fastest was Iona. So non-eligible was the answer we were looking for. Let's get on then with our final round of the quiz. This one is themed around pension re-enrolment. So we'll go straight into question number 13, which is, how often must employers carry out re-enrolment duties? Is it A, annually, B, every 2 years, C, every 3 years, or D, only when an employee requests it? So let's move on to question 14, which is, when is your re-enrolment window in relation to your duty start date or previous re-enrolment date? Is it 3 months before to 3 months after the 3rd anniversary? B, within 6 weeks after the 3rd anniversary? Or C, within 1 month after the 3rd anniversary? That's looking good. We'll move on to question 15. So select all correct answers for this one, maybe. Which of the following employees would not need to be re-enrolled? Just pick one answer. Is it A, earning below the earnings trigger? B, they opted out or left in the 12 months before re-enrolment date? C, they're currently working their notice period? Or D, all of the above? So which of the following employees would not need to be re-enrolled? And we'll get on to question 16, the last question of the quiz. And this one is true or false. I've not had to re-enroll any employees, so I don't need to complete the redeclaration of compliance. Is that true or is that false? So we've got most of the answers in, and that is the final question of the quiz. So let's now take a look at our last anagram round. So your anagram for round 4 is certain ordeal, and the clue is it's every 3 years. That's certain ordeal, and it's every 3 years. So if you can work that one out, pop your answer in the questions, and we'll shout you out if you were the fastest with the correct answer. So let's take a look at the round 4 answers. Question number 13 was, how often must employers carry out re-enrolment duties? There's been a few clues since we asked that question. Let's see what you said. In fact, 100% of responses came back as every 3 years. And the correct answer was every 3 years. Originally, it was called triennial re-enrolment, but for some reason they changed it to cyclical re-enrolment. So well done everyone for getting that one correct. Question 14, when's your re-enrollment window in relation to your duty start date or previous re-enrollment date? So results of that poll, 93% of you saying 3 months before to 3 months after the third anniversary. And then a couple of responses to answers B and C. Let's check on the correct answer for that one. And it was indeed A. So that window is 3 months before to 3 months after the third anniversary of your duty start date or previous re-enrollment date. And if you use the pensions module, the pension assessment will re-enroll your employees in the tax period that the re-enrollment date falls into. And sometimes that can be before the re-enrollment date, but you won't see any contributions for employees that have been re-enrolled until after the re-enrollment date. So well done to everyone getting that one right. Question 15, which of the following employees would not need to be re-enrolled? So got a mixture of answers here. 76% of you had gone with all of the above. I think I might have given a bit of a clue on this one. Let's see what the correct answer was. And it is D, all of the above. So employees who are earning below the earnings trigger are not eligible, so they wouldn't be re-enrolled. If they opted out or left the pension scheme in the 12 months before the re-enrollment date, those employees can be excluded from re-enrollment, or you can choose to re-enroll them anyway. And employees currently working their notice period can be excluded as an exception as well. So the correct answer is all of the above. I guess A, B, and C were also correct answers. So well done to everyone on question 15. And that last one, the true or false. See if we caught anyone out with this one. I've not had to re-enroll any employees, so I don't need to complete the declaration of compliance. And 100% of the vote is saying that is false. And that is indeed false. So even if there was no one that needed to be re-enrolled, you still need to do that redeclaration of compliance, and you need to do it within 5 months of the third anniversary of your previous re-enrollment date or your duties start date. So well done if you got 4 out of 4 on that round or 16 out of 16 on the quiz. Let's just finish up with our final anagram round. The anagram was certain or deal, and it's every 3 years. And that one, of course, is re-declaration. So let's see who got the correct answer the fastest. And the winner for that round is Rebecca, getting re-declaration. Caught a few of you out with re-enrollment there. Re-declaration was the answer. So very well done to everyone who joined in the quiz there. That has actually brought us to the end of today's quiz. Just to let you know a little bit more about the Pensions Discovery Series and the digital badge. So the criteria to earn the digital badge is that you needed to attend at least 5 different webinars plus the pensions quiz. So you can tick off the quiz as you've been here today. If you've been able to join us live for any of the other sessions, and we've got some repeat sessions coming up over the coming weeks, you'll qualify for the badge. We will be sending them out before the end of July, once we've concluded this series, and you will receive your badge via email. We also have some webinars scheduled in July, so take a look at what's coming up, a couple of dates for some of these sessions as well. So it'd be great to see you on some of those if you would like to join us. All of our webinars are free to attend. You just need to sign up at our website, sage.co.uk/webinars. As always, you can find further help on our help centre, sage.co.uk/help, or by clicking any of the help icons in your software. And just a reminder that we do now offer personalised training. So if you are looking for some dedicated one-to-one remote sessions with one of our experts, we can tailor that training course to your requirements. You'll gain greater confidence and accuracy. It's delivered remotely, so it's from the convenience of your desk, so no time or travel costs involved. Prices start from £250. You can see some of the feedback from other people that have attended these sessions. And if you'd like to inquire, just scan the QR code and fill in your details. So with that said, we will be closing down today's webinar in the next few minutes. If you do have any final questions or comments, you can pop them into the Q&A and we can get back to you there. And we will upload, if we haven't already, we will upload the answers to the quiz questions. So you'll be able to grab those as a handout. So they'll be available, I would say, in the next kind of 30 seconds. But just like to thank you all for joining us today. I hope you enjoyed today's quiz and the rest of the webinars in the series. And you're looking forward to earning that digital badge. It'd be great to see some of you at the July sessions that we've got scheduled. When you leave us today, if you wouldn't mind completing the survey, we'd very much appreciate hearing any of your feedback. And we'll also send a recording of this quiz to you as part of your follow-up email. So I'm just going to disappear behind the scenes for a minute or two, just checking we've got everything covered in the Q&A, and I will be back with you when we're ready to close this down. So I'm going to speak to you shortly. Hi again, everyone. That's just me back. We are pretty much out of time now, so we will be closing the webinar shortly. Thank you once again for your time on this sunny afternoon. Stay cool out there, and we look forward to seeing you perhaps on some of our other webinars in the future. But for now, on behalf of myself and Alice, thanks so much for joining us, and we'll see you again soon. It's goodbye for now.